Welcome into the crypto bunker. Today, I want to talk to you guys about crypto, also about some macro stuff, cover gold and silver, cover some miners, but really the main focus today actually is going to be crypto. Um, I do think there is a potential for a short-term trade here. As you can see, as I like to say, the moving averages are wide here, and that's on the downside, right? And they're all in order. So we have the 200, the 150, the 50, and the 20 SMA on the daily. As you can see, they crossed bearish here. Um, you can kind of see where we topped out, and we can see, was it similar in width to this? Because you would think it might be, and it was. We probably should have seen this. Well, we are seeing it. But yeah, so think about basically how wide. I mean, I think even this was more wide when we were like totally topping out, but we can check. Yeah, so this was the widest it got. That was probably the most overbought at this point. Obviously, you can see it just went straight up. Here it kind of just like was an orderly. It was a little bit tougher to pick this top. I did sort of pick that top as I did sell around 4,600. So, but still holding some ETH that I have staked. And what we heard with the Gurley testnet was that there's one more testnet to go in August, and then if that goes successfully, we will see the merge around September 15th, which is probably a little bit sooner than people expected. But it's hard to, in terms of just recent news in the past couple months, things have been so bearish with other things that people haven't really tried to price in the merge yet. So I do think that there is a trade to be had here in terms of the merge. And I wouldn't be surprised if we got up to the 200-day, which would be about 100% gain from here. And so people are very scared right now. And I want to be here to say, who cares? But also, I want to be here to say, let's take a look at why people are scared, I guess. We're going to take a look at two of the most important things to crypto in the crypto space, which is the dollar index as well as the US 10-year Treasury note, because the US 10-year is really rates. Okay, so this is where we are pricing in basically future inflation, basically future Fed policy, which is really what is in control in the driver's seat. What we've seen is we've seen a potential top, in my opinion. As we can see, once again, we are wide on the moving averages. We crossed bullish December 21st. And obviously, this was kind of an accumulation range. And then, again, this is sort of similar wide pattern to here. This is even more wide. I think it's like a blow off top potentially scenario. But again, as you can see, the moving averages here, this was the bottom when we were wide, just like we are in Ethereum on the bottom end of things. And now we are wide on the top end of things. And this to me looks like potentially a blow off top. And what we're seeing now is a rejection. We're seeing lower highs. We're seeing a potential bear flag formation here, which would probably take us down to around this trend line of 230, potentially the 200-day, but who knows? I mean, it could just settle in around the 150, at least initially. But what we're seeing here is a potential cross as well in the moving averages, which we haven't had yet, basically since in the whole sell-off of stocks since January, we have not seen a bearish cross. See how it's stayed above the 50. The 20 has stayed above the 50 the whole time. We are about to see a cross. We're sort of getting a little bit, I don't know, I would say the bears of the rates are sort of dominating, as in, this whole move here, the bulls were dominating. As you can count the green candles versus the red candles. You can count the red candles versus the green candles. And obviously, what this is saying about Fed policy is that the Fed cannot raise rates past 2.92. So right now, I think it's at 175. Don't quote me on that. I should know that. So I apologize. But what it's saying is basically that the Fed, if they raise 100 more basis points, that would put us at 275. And that's kind of, I think, where the market thinks that we need to be, because we are headed into a recession. So the Fed shouldn't be tightening this much into a recession specifically. So basically, the inflation number we saw yesterday was peak fear, probably peak inflation for CPI for sure, because we have seen gas prices roll over. We've seen commodity prices roll over. Pretty much every commodity is down like 30+%. So we are seeing capitulation for the inflation hedges. Like oil, though, is a little bit different. It's a supply thing. So it is kind of like a little bit of a mess. And I do think it's manipulated, the market, by the Fed, by whoever you want to say, the banks, in terms of the commodities, to make it look like inflation is rolling over, which they've basically broken the back of inflation, I guess, based on this manipulation, and it sort of works. You can see copper. Copper is usually an indicator of the economy, and so we can see how much it's slid here. It put in a double top. Obviously, I've showed you guys this on the long term. I do think that this is a time to start accumulating potentially some copper miners. I will tell you one that I'm looking at is Amerigo Resources. This is owned by Ross Beatty. I'm looking to get this one around 70 cents. So I'm going to check back on this one, a little bit later. But I'll go back to crypto here. Well, let's check on the dollar real quick. Again, we're seeing very wide here. Again, we haven't crossed. We're not even close to crossing. So let's not, get ahead of ourselves. It's possible that the dollar just is so much better than other currencies at the moment, that it just has to keep going up, I guess. But it's possible that this was sort of a topping candle, a little bit of a shooting star. I mean, and this is like a short-term thesis. So again, we could see it come back down to 105 and test the 20-day. And then maybe we get a cross. See how we almost got a cross here. We did not get it. So it kind of pushed it higher. But if rates continue to go down, I think the dollar should continue to go down as well. The rate bulls sort of tried to get us back up above 3. They did shortly, but then they were rejected. And the thing to know about this is that the bond market is the sort of the smart money. The equities is kind of the dumb money. And then crypto is probably like currently sort of like the dumbest money, but it's following equities. And there's an argument to be made that it's not the dumbest money. I was just kidding. But anyway, what I'm seeing here in terms of the dollar, in terms of rates, in terms of obviously the volatility of the market is down. So I think we could settle back in maybe we'll break even. Let's look at this on the weekly, actually. See what this is looking like. Yeah, so it's hard with volatility because it's sort of like a weird instrument, but I do think there's a potential that maybe we come back down to 21. I don't know. I mean, it's, again, this market is very unpredictable. We can look at sort of this bottoming out rounding process here of the NASDAQ. I mean, we already crossed bearish twice here on the weekly frame. On the daily frame, we're fully crossed. And again, were we wide here? I mean, we were. I would consider this wide for the stock market. And now we're going back above. We were rejected a bunch of times here. We're now going back above, and we could see, I think we probably have already seen, the bullish cross on the 4-hourly here, which is similar to what we're seeing in Ethereum on the 4-hourly. We're just sort of seeing these bullish crosses start to come in. The 200 4-hourly is, I think soon will be sort of out of the way, and then we can sort of go up. I mean, the coin that's outperformed the most has been Matic. As we can see, these are actually pretty wide even on the 4-hourly. I wouldn't be surprised to see a pullback to 60 cents here. And then that's probably when you would want to get long again. Because as we can see, we sort of broke this downward wedge, and we could come back and test that. Usually what crypto will do, just like Sol is doing now. Sol to me looks super bullish. And to be honest with you guys, like, again, we already had a couple crosses here. And I'll just be honest, like, I know that I said I wasn't going to cover crypto, but I just look at the charts, and this is just what I'm seeing. Obviously, people can see other things, but to me, it looks like, okay, we did get rejected a little bit here on the wedge, but on this bigger wedge that comes down from this area, we're actually coming out and testing it back now. And my theory, this is just a theory, this is just for fun. None of this is financial advice, obviously. So my theory is that because SBF Alameda, research is sort of saving the crypto market space. He's like, the white knight in shining armor, sort of like coming in to buy up all these distressed assets. I do think that because FTX has a connection to Solana, because, I just think with how unregulated these markets are, I do think that SBF has like an infinite bid on Solana, and I don't think he's going to let Solana, be outperformed in a run-up scenario by Ethereum here. So I think if Ethereum can double, I think Solana could do a little bit better than a double. But I mean, this is all pending on, everything I just talked about previously. We do have resistance at 56, and that's kind of like where this all started, again with the wedge. But I could see us getting back up to this area at $80, which is a little bit better than 100% gain. So again, I just wouldn't be surprised. And I'm taking the trade. So a lot of these like mining stocks that I've been into are just like trying to catch a falling knife, and they haven't actually formed this yet. So where the mining stocks are is probably like in this like liquidation phase, like where we were here with crypto. But crypto has sort of already like formed these higher lows and this structure where we could shoot up, I think. And gold and silver are a little bit in a liquidation phase right now, I would say. And again, I do think we're wide here. I do think that this is a potential bottom for gold. But again, it's a manipulated market, and unfortunately, until that breaks, we may have to wait, and that's just kind of how it is. A lot of these mining stocks are completely oversold. They're trading at like half of their book value, just like net asset value of what the company is worth, like in terms of just the mines, the equipment, all the stuff that goes into their assets. So I've, been sort of buying, selling, and sort of buying, because it's just like every morning it's like, oh, we know that they're going to go down now. So you kind of just like sell the open. wait for it to go down and just see what happens. Equinox, I've gotten killed on. This thing is at all-time lows, which is insane to think that you can buy this at the price of the IPO, considering they're on the path towards 1 million ounces produced per year. And now they're trading at like probably below $1 billion market cap, which just makes no sense. Obviously, their revenues at some point will be upwards of $1 billion. I mean, they're trading at like half their book. They're trading at maybe 2 to 3 price to earnings. We have Mag Silver. I just got involved on this like right at the price we're at now, because I was just like, first of all, I've always wanted to have Mag because it's going to be one of the biggest tier one. Well, it's going to be one of the only tier one silver producers in the world. It's basically in the best silver producing mine in the world. It has like 45% share of it. So it's almost like free money at some point. I mean, for things like this, that it's just a leveraged bet on the silver price, and we can see silver is up today a little bit, but again, I do think that on the daily, I mean, it does look like, hey, like maybe we somehow aren't as overstretched as gold, but again, I do think some of these ones I like. Pan American, I just bought up. First Majestic, Endeavor, Fortuna. Those are the ones I like. Not financial advice, obviously, but usually silver and gold stocks will bottom before stocks bottom in a recession. So usually gold and silver will bottom 6 months prior. So if we are bottoming here in gold and silver, that means that stocks will bottom January 15th, around there. But again, this is not part of my thesis where in the mid or short to midterm, I guess, the next couple months is sort of this sweet spot potentially for risk assets is what I'm thinking, because of the fact that we're sort of like not technically in a recession yet, but we're also like knowing we're going into one. We're knowing the Fed is going to have to pivot. We're knowing that inflation is rolling over. And so, and these, again, these assets have already priced in a recession. They've priced in World War III. It's essentially, they've priced in tons of things that are happening around the world. And at some point, everyone is so fearful that it has to go the other way first because the consensus is so bearish that there basically is a short squeeze. I mean, it has to sort of shake out the bears a little bit. Shake out the bears. And I mean, that's just basically, I think, what we're looking at. And I think it's crazy that these two are basically, we're just as wide at the top and now potentially at the bottom. I mean, this is stuff you're not going to hear from other people. I'm telling you right now. I mean, I don't think that necessarily people do the same type of like deep dives I do on this type of stuff. I don't think people can cover different sectors like I can with like ease basically now at this point. I just don't see it. We do see 20-year bonds as well. I talked about this, I think, previously around these levels. Potentially, if we look at it on the monthly, we can see like big time buys coming in. So if you are in a retirement account and somehow sold bonds like I did before, this is a time maybe to pick them back up, because I would just say it's rare to get a cross like this on the monthly, and this is apparently bearish or whatever. But if we're going into a recession and the Fed is lowering, is going to have to do quantitative easing, or I just think that people will, I mean, not people, but just institutions they'll want to allocate to bonds again because it's like a scary time. And obviously, um, I think it's just kind of like still somewhat of a safe haven. Don't get me wrong. I'm not saying to go out and buy bonds with your own money, but if you have money locked in an account somewhere in like an IRA, I would just say this should be like a percentage of your portfolio, not even that big of a percentage. I'm not like a 60-40 guy. I mean, if I had to say like a retirement account should be like, 10% energy, 10% gold miners, 10% commodities, 10% or maybe 20% S&P and NASDAQ, 10% utilities, 30% cash, 10% bonds, something like that. Would probably be good for this environment. It's something that I would even throw emerging markets in there as like maybe a 5%. It's something that you have to be like an active sort of active money manager in the future, because I do think, again, like the future portfolio allocation in like 10 years is going to be like 20% crypto, 20% stocks, 20% gold and silver, and 20% energy and mining stocks or something. I don't know. It's and 10%, healthcare or whatever. I'm not a supporter of healthcare, but there's obviously people who think that that's a good sector to allocate to. I think it's probably overbought, but and I was looking for a short on Moderna here. To me, this looks like a huge Head and Shoulders. And I think people are done taking the medicine that they provide. And I don't know. The thing just doesn't look good to me. It looks weak. Head and Shoulders here usually would be something like this. 0. I mean, even the CEO himself said like less and less people are taking this stuff. So you guys know what I mean, but I think it's sort of in the cards, because it just again, look, we saw sort of a rejection here. It's like a weird formation. It's very kind of strange. But again, it's kind of similar, I guess, to this, except the opposite. This was sort of higher lows, and this is lower lows and lower highs and higher lows. So obviously, I guess this was bullish, and now maybe this is bearish. Just a thought. I'm tempted to short or at least buy put options to down to like 50 is probably my target here. Maybe I don't know. I don't know when I would even set it as. This is just ranting here, but let's check out the Solana chart. Sorry that I'm not covering Polkadot. I actually Polkadot has been disappointing to me, but it just like, what is this? Like I don't know. It just looks like it wants to go sideways, like in this range for a while. It is not as bullish. It's not as bullish as Sol at the moment, and I'm just in this for the short term. So again, take that with a grain of salt. And if Sol outperforms ETH here, I probably will buy. I will just probably like shift to ETH from Sol. So we'll see what happens. But if we look at this on the 4-hourly again, we want this candle here. I mean, this is a pickup, guys. Oh, this is crazy. Yeah, I sort of wish I could put more into this. I am putting a decent chunk, but this is getting picked up. Not financial advice, but again, this is where you go long on the next green candle that goes above 38. That's where you start to think, okay, we're going long, and also we're just crossing here. So and who knows? I mean, you could technically you could buy here and then just hold for the long term. Like you never know. This could be the actual bottom. Um, and then, you know, if we go back to these levels, you just sell again. There's always potential to do that. And I do think there's a good chance that we double from here. So that would be pretty fun to be a part of, obviously. So Bitcoin doesn't look as strong necessarily. It's yeah, it's weird. I think because there were so many liquidations, and usually people would be like, "Oh, Bitcoin needs to moon before everything else does." But I mean, it is kind of breaking out. It's weird. Like here, it really did look like it was a bear pennant, and we were going to break down to like 10K or whatever. But I'm not sure that can happen, and I'm just being honest about it. And um, we're seeing some green volume come in here on the breakout. We're above the 200 on the SMA. So if we can cross bullish here, yeah, it may be, you know, a good time to, and like, you know, shame on me, to be honest, to not see how wide the 4-hourlies were here. I mean, this is just trading 101. All you have to do is you just go wide, you buy, and then, you know, if they get close together, it's an accumulation. And then again, like, you know, when they're wide on the upside, let's take a look, you sell. Like it's clockwork. And I've learned this from Oliver Velez, I think his name is. He's trading guy, you see him on YouTube. He talks about this all the time. He's a lot more sophisticated than I am, but I mean, I wish I had the time to, and again, I've had the thought of just kind of throwing it in the towel and just like trading full time, but it's so hard in the moment when like everyone's getting liquidated and just peak fear, you know, 17.7 peak fear, and you actually lose track, and there's so many things happening in the world. You end up actually losing track of what's going on. And I've obviously been like, I'm allocated to crypto for, you know, the long term, in terms of having staked ETH that's in a centralized exchange. I can't get it out anyway. And I probably won't be able to get it out realistically for like another like 10 months if I even wanted to. And I am bullish, you know. I mean, I know I go back and forth a lot, and you know, if you guys notice it or not, if but I think I do that because I feel the need to make money so badly with everything that's happening in the world and inflation and um wages not rising to meet that inflation. It sort of like puts a strap on your sort of like finances. Um, and it's really difficult. And I think it's a bad thing to get bearish at the wrong time and bullish at the wrong time. And this is just an opportunity, in my opinion, to get bullish at the right time. I mean, look, we're just breaking 21 here. Um, we're we're like getting there. We're close. So hopefully you guys got something out of the video. Please, you know, not financial advice. Obviously, this is a riskier trade because of the environment that we're in. But let's go for it. Yeah, hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great rest of your day.